Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today's the 24th of January 2019, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few charts, the usual stuff, guys. But before we start looking at that, we have to have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, guys, let's quickly jump into the charts. Now, the first one I want to touch on here is actually the FTSE 100. Now, of course, overall, we're still trading below this downside resistance line taken from the highs of August last year, and you can see that this week here the index kind of got close to that downside resistance line and almost managed to reach that, but never kind of reached it, and since then kind of reversed back down, and of course now it's trading lower. But the more important one is, from the short-term perspective, the fact that it has broken this upside support line, this very short-term upside support line, of course taken from the December lows, and certainly that adds a bit of more negativity. Again, I'll repeat myself, for the short run we could see a further slide here, and this is where we will aim for the 6,790 level. Slightly above that we do have the 600 and 800 level, so of course you could in a way target that one first, but just to kind of keep in mind that slightly below that we do have also a good potential area of support near the 6,790 level. So keep your eyes on that one. If it fails to withhold, if this area fails to withhold the price from kind of pushing lower, then yep, a break below that could lead towards a retest of this area right here that I've got kind of highlighted, and that's approximately around the 6,750 zone. So you can see that back here in the beginning of January, here on the first days of January and also the last days of December, it acted as a good area of resistance. So this time we will see this as a good potential area of support. So that's why, guys, for now stay very careful on this one. Certainly we are already well, it's already quite low, and we might see maybe a bit of a correction here back to the upside and then a push back down again, so something like this. But again, for now, still the overall from the short-term perspective, we are looking at some lower levels here, especially, like I said, the first one being the 6,800, and just slightly below that 6,790 zone. So keep your eyes on that one, and then let's see how this plays out further. If this suddenly reverses strongly back up and moves back above the short-term upside support line, then of course, yep, be very careful, because this could potentially lead to further acceleration of the price here, and we could actually end up testing this downside resistance line that I was talking about. So for now, guys, even though it is a very interesting index, and where it is right now as well, the only thing is that be very careful with this, because it's very close. It could actually go back above the upside support line, but it also could go lower. But for now, just judging by the picture that we're seeing right now here, certainly the market is not open yet, but the way it kind of closed yesterday, we are seeing there is some potential for more downside here. And like I said, the lower levels that we're watching here are the 6,800, and just slightly below that the 6,790. Keep an eye on that one. Jumping into US oil, so I'll also stay on the 4-hour chart here, because looking at the daily, to be honest, there's not much happening. But at the same time, to be honest, it is trading between these key areas of support and resistance. So you can see that yesterday the commodity tried to push higher, but it kind of got held here near this 53.30 zone, marked by the highs that we saw here back on the 11th of January, and certainly from which it kind of retraced back down. So certainly currently looking at this 4-hour chart, it's sitting near, well, exactly bang on the 50 EMA shown here as the red line. So in a way, for now, we're going to be very cautious. It has some more room to travel further down, especially looking at this, looking at the fact that it's trading right now below the pivot, below the daily pivot. And we could start targeting the S1 here around the 5160 level, or even just a few points lower runs the 200 EMA, which also could be a nice target for WTI. So for now, guys, long story short, basically this, of course, this such a formation is a bit more to the bearish side rather than the bullish. So to be honest, there is a good chance that we could see, like I said, these further declines here towards the S1 at least. If that fails to kind of withstand the bear pressure here, then yep, further declines are possible again. Of course, this is where we will aim the towards the S2, which is around the 50.90. But to be honest, a much better area of potential support could be seen here near the lows of the 14th of January, and that was approximately around the 50.35. So you could in a way target that, but for now, guys, be very careful. If this suddenly drives back above the pivot here, certainly this will interest more bulls here, but for us, let's say, to start aiming a little bit higher here, at least from the short-term perspective, we would need to see this this commodity driving back above the 53.30, and a nice good break above this could lead towards these highs that we saw here already this week, and that was near the 54.30 level, something like that, approximately there. But to be honest, if that fails to kind of withhold the price down, then yep, the next potential area of resistance could be seen here just slightly above that, the 54.60 here that was marked here by the highs of the 4th of December. And if that fails, well, guess what? I mean, further acceleration to the upside is very much possible, and this is where we will target the 57.50, or just maybe a few points slightly above that. But nevertheless, guys, from the short-term perspective, I'll probably repeat myself again a little bit. From the short-term perspective, basically a nice good pop above the 53.30 could open the path towards these the slightly higher level. But in order to kind of consider much higher levels in the long run, of course we need to see a nice good pop above the 54.60 level, and then we'll target much higher levels. So like I said, from the very short-term perspective, this is what we're keeping a close eye on. And on the downside, well, again, because we are trading currently below the pivot, so to be honest, there is a likelihood that we could see further declines here towards the S1. So that's why keep a close eye on that one. And like I said, this formation that's happening right now, it is more bearish than bullish. So, but again, at least for the short run, because in terms of the near term, or like slightly longer term perspective, in order to kind of start looking at much lowers or further declines here, maybe back into the towards the area, or should I say back below the 50s, back below the 50 level, then we would need to see a drop below the 50.35, and this way we could then target much lower levels here. So for now, let's play it safe, let's play it carefully, and see how this performs later on. Jumping into AUDCAD. Now this is a very interesting one. I was talking about this one in one of my previous videos, guys. I told you to keep a close eye on this because this was coiling up, was getting this into a squeeze. And yesterday, when we received the Canadian retail figures, basically we had a nice uprise here initially, where the pair managed to test the upper side here of this, well, let's call it a triangle, even though we have a lot of empty space here. But so if we're gonna just take it from here, from the short-term kind of side here, basically it was coiling up here nicely, then it had a nice push higher, but got held by this downside resistance line here. This downside resistance line has been running here since the highs of November last year. So you can see that the pair managed to push just slightly, just a few ticks above it, but then quickly the bear stepped in and drove this one back down, not only below this downside resistance line, but also forced it to drop below the pivot. And to be honest, that it wasn't enough for the bears, and we could see them actually closing the pair below the, or actually should I say dropping below this upside support line here. So now the pair is trading here near the S2. Certainly, to be honest, this creates a more of a bearish scenario here, and we could see further declines. So the next potential target for us will be here near the 0.9430 level, approximately there, marked by the lows of the 3rd of January. So I do understand it's only about 50 pips away from where it is right now, but nevertheless a very good potential area of support, and we'll have to be just very careful and patient and see how it plays out near that level. If it continues to drop further, then yep, further declines are possible, but for now kind of we're just gonna, like I said, we'll play it slow. We'll just go step by step, and the first one that we're keeping a close eye on is the 0.9430. If suddenly this reverses back up here and gets back inside this above this upside support line, this one here, well, I mean, this is going to place us in a more of a neutral zone. So for us now, we would need to see a nice good pop above the 0.9560 just to kind of be on the safe side here, and then we'll target much higher levels, because such a trading activity can cause sideways action here, sideways movements, and to be honest, like I said, it's better to be safe than sorry. So that's why we're going to target the 0.9560 level first, and this could be our gateway towards higher levels. But for now, the upside is just slightly off the table, guys. Jumping into euro dollar, now this is a bit of a crazy one, and of course, given the fact that we do have the ECB today later on, so don't forget about that. Check out the economic calendars for that. So basically, yesterday it had a nice push here to the upside. We managed to push higher, managed to find resistance near the 113.95 level. Certainly, we're still keeping a close eye on the 114 zone. So in a way, the 114 could be that gateway towards higher levels. Of course, if this wants to continue pushing higher, the only problem is that again, like I said, we do have the ECB press conference later on, so this could create a lot of volatility, and that's why be very cautious. We are still trading above this upside support line, this medium-term upside support line here, running from the lows of November. So we could in a way maybe see a strong drop back down, but if it fails to drop below this upside support line, it could potentially rebound and push back up. So such activity, of course, we've seen such activity in the past, so be very careful with that. Let's see how this plays out. On the downside, well, as you probably can see this from this chart, we need to see that break here below this upside support line, and of course a drop below the 113.35, and then we'll target much lower levels like the 113.10, or even actually going all the way here towards these lows that we saw here back in on the 14th of December, which were near the 112.70. So also a good potential area of support. So keep your eyes on that one. But again, for now, guys, basically what you could how you could kind of monitor this one is to basically to be on a safe side, just continue monitoring this 114 level. A nice good pop above it, then yep, could open the path towards higher levels. But again, always have your stop loss in place, guys, and just kind of don't trade without it. Let's put it that way. And the last pair I wanted to quickly touch on, and that was the USDJPY. Now this is a bit of a boring one, I would say, but nevertheless, let's have a look at it, because it slowly continues to grind higher. It is trading above this little upside support line here, and that was taken from the inside swing, or should I say, actually no, that was taken from the lows of the 3rd of January. So still kind of that line remains intact. It kind of still supports that upside. The only problem here is continues to kind of trade below this key area of resistance near the 110 zone. So it's not far from this 200 EMA. So in a way, what you could look at here is if we are going to get a nice pop here above that 110 level, then yep, this could be that nice move that we would be hoping for to see in USDJPY to the upside, of course. So this basically could lead towards the retest of the 110.80 or even above that, the 111.45 approximately there. But again, let's just go step by step. Let's see initially what he wants to do with this level here, the 110. But again, keep it on your radar, because if it gets nice push here above that 110 level, it also could place itself above this 200 EMA, looking at this 4-hour chart, of course. On the downside, as you probably understood, we need to see that nice good break here below this upside support line, the short-term upside support line, and of course then we will consider we need to actually, for better confirmation, let's put it that way, for better confirmation, we would need to see a nice good drop below the 109.10, which was marked here by the lows of the 22nd of January. So in a way, guys, keep your eyes on it. So basically that was this is the low of this week for now. So a nice good drop, not only below the upside support line, but also a drop below the 109.10 could open the path towards much lower levels. And this is where, of course, let me just actually get rid of a few lines here. So this is where we will target areas like this one here around the 107.75. I do understand it's quite a lot, but nevertheless, very good potential area of support here, near, which was last time seen here, holding the rate from moving lower on the 10th of January. So good potential area of support, like I said. So keep your eyes on that one. But then again, for now, just try to play it safe. On the upside, keep an eye on the 110. On the downside, keep an eye on this upside support line and the 109.10 level, so approximately there. Okay, guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me later on at my Traders Tea Time, and that's 14:15 GMT time, but for now, I hope you have a fantastic trading day. Bye-bye.